Muy buenas noches. Welcome to season 3. How are you, my brother?
Hey, brother, what's going on?
Oh man,
How are
I'm
you?
just excited to be back. I miss
I
that
know.
song.
The last show was in March of this year, believe it or not, and it was helping one of my local friends with his campaign for school board.
That was
And
for
then,
Justin, right?
yes, and then we took whatever months that is, 8 months or whatever off. But that's fine. There was a lot going on. We had a lot going on this summer. So it's okay. It's good to be back.
It's absolutely good to be back. This is our season 3, episode 48. Can you believe that?
Yeah. Yeah.
It's
I
really,
mean,
really exciting.
Yep. Hey, you know how you were complaining that Jerry didn't make any moves during the
Okay,
right
no,
up to the trading
no,
deadline?
no. I gotta correct you. I wasn't complaining about Jerry not making any moves. I was complaining about the local media complaining that Jerry didn't
Well,
make any
yeah, that's standard. But what I was gonna say is it was actually not correct.
moves. Okay.
Uh, the Jones family had a big announcement, but it had
Mhm.
nothing to do with football. We're gonna have Billy Joel and Stevie Nicks
Oh, I
concert
saw
in
that.
April.
I saw that. Man, what
So
what what doesn't he do at the stadium? It's
that's what
crazy.
that's what irritated the media even more
Yeah.
that instead of going after, which they did try to go after one receiver, but
Yeah.
it just irritates the tar out of them that they seem to spend more time with other stuff.
Yeah, and it irritated that receiver. So he's the one for the Texans, and he's not playing tonight. That's how
Yeah, I
irritated
saw
he
that.
got.
I saw that.
But
It cost him a
yeah,
big
man.
paycheck.
I listened to all their 5 podcasts on a weekly basis, or daily
Hmm.
basis, and yeah, yesterday was just brutal.
Yeah,
It
yeah. I
was a
stay
blood
away.
it was a bloodbath. But
I stay away, except for the Doomsday podcast because that's based on the game. That's just a recap of the game. But
right,
the other stuff, and I got to go to the game by the way
I
with
know
Damian.
that's awesome.
And yeah, it was a good game to go to. Two things: the Bears travel well. Um,
Hmm.
there was a lot of Bear fans there, and the other thing is they're actually really nice fans because we took our time coming out. We went out the East Plaza because I wanted to see the Miller Lite. They have it. Jerry put in a new, just picture a giant sports bar on the Collins side of the stadium. So the one, towards my
Yep,
house,
yep,
and they have food trucks. They sell drinks after the game. It's not closed. It's actually people hang out.
man, that's awesome.
There's a field there,
Yeah.
and so we're chatting up with the Bears fans. And if it was Philadelphia,
Oh
that
yeah.
if that would have been the score, there would have been a bunch of fights.
Yeah, it's different, but I'm glad you went. I'm glad you enjoyed it, man. I've been there before, and it's just a big old party town. It's awesome, but so very excited to be back tonight. We have 2 excellent guests, dear friend of mine, and also business partners of mine, and we thought we'd get in here and do a little chit chat what's going on with this specific industry. But to kick things off, brother, go ahead and introduce us.
Yeah. So with that, my name is Javier, and we are Problems.
And my name is Jorge and Opportunities.
Um, as we were saying, we're very glad to be back. It's been a few months. March was the last time we had a guest, and we've had a busy year as everybody has as well. But to remind everybody that is taking the time, we named our podcast Problems and Opportunities because that was told to us a few years ago. From every problem, there is an opportunity, and we have learned to believe that. We have learned to embrace that. And so we try to find folks who agree with that, who can come and tell us their experiences. We actually have had guests that have done a lot of really crazy or really great things in life since they've been on the show. In fact, went to a live concert for one of our guests Monday night, and so that is our intention with this show is to bring you that message, especially after what we went through with the pandemic, what is happening in the market, which we'll talk about. But the intention is to find opportunities in the problem. So, uh, brother, tell us about our guest tonight.
Yeah, absolutely. So thank you very much, brother, for your introduction to our podcast. I do want to admit that I, in a way, hijacked this podcast, this episode tonight, little, selfishly to talk about, specifically my industry. But I think that, it is pretty obvious that it is affecting everyone outside of us. of my industry, and that's why I want to bring in some focus into opportunities. So obviously, I'm talking about our real estate market and that mosquito that keeps on buzzing around. That's called the interest rate, and I call it the mosquito because that's the way it feels, and that's the way it should be taken, actually. Because owning a home is still a great opportunity for everybody, but I think everybody's just being bothered by that mosquito. But I first want to introduce Josie Herrera, who's from Waterstone Mortgage. And then one of our returning guests, Miguel Davila, who is with Movement Mortgage. So welcome to our podcast, guys. How you guys doing tonight?
Thank you. Doing great. Thank
you. Awesome. Great to see you guys on our screen. Thank you very much for your time and spending some time with us tonight. I think it's important for us to, just to tackle some of these myths and talk about what's really happening with our industry and, with the lending industry and real estate. But before we get there, I want you guys to do a brief introduction. And I'm sorry, Miguel, but Josie's going to ladies first. So Josie will go first. Josie, tell us quickly who you are, your company, how many years you've been in the business, and then I'm gonna throw in a question in there just to kind of break the ice with everybody. Josie, if you weren't in lending, what would you be doing? What else would you be doing? So go ahead.
Okay. Hello, everyone. My name is Josie Herrera, and I'm a mortgage loan originator with Waterstone Mortgage. I've been a loan originator for a little bit over 20 years. I enjoy helping people. I enjoy helping people get in the American dream of owning a home. And let me answer your question. What would I be doing? Yes. I love working with numbers. So I would probably be either in the bank or doing something with finance, working with numbers.
So you stick with the same field no matter what?
Yes. Since I was a kid, numbers were my favorite. I just loved math, and I think that's what led me to where I'm at right now.
Okay, awesome. Thank you so much, Josie. Miguel, talk to us.
Good evening, gentlemen. Good evening, Josie. How are you guys?
Hi, great. Thank you.
Doing excellent.
My name is Miguel Davila. I am with Movement Mortgage. I'm actually the market leader for El Paso and Las Cruces. I've been in the industry for almost going on 20 years, actually, in this industry. And somehow managed to still keep my hair and my head in place. As a matter of fact, Jorge, I thought we were going to talk about something else, but I guess, we're going to talk about real estate.
Yes, we are.
Well, I can tell you, if I wasn't actually in the mortgage industry, I would have probably be pursuing a career in acting. I've always loved acting.
Really?
I did a couple of years, actually, in a couple of plays back in my younger years, back in my teens, actually.
Really? Where at? With what or how?
Well, that was actually a group in Juárez that it was called Teatro 1939 from Pilo Galindo, actually from the Galindo family in Chihuahua. And there was actually a play that we did back then, and I'm talking about 30 years ago. It was called Dios en Disputa, and it was actually in the Auditorio Benito Juárez, and I was actually the main actor on that play.
Míralo, look at you. And you know what, Miguel? I totally see it. I totally see you. I totally see you as an actor, man. And for our audience, I do want to say that we will be doing a bilingual show, so we'll be switching over to Spanish now and then. Okay?
Excelente, porque no hablo inglés.
Muy bien.
Hey, sorry, I got a little sidetrack here with the comments. We have quite a few comments coming in. I was trying to put them on the screen, but we have Israel for that. The real estate market is, and we were talking a little bit about what happened in the mortgage crisis back in 2008, right before we started. But the mortgage itself has been let's call it the benchmark of the American economy. If you talk about bonds, if you talk about anything, at the very core is a mortgage, which is why you guys are so important. Both real estate and the mortgage business, and it affects a lot of things. I'm in the insurance business, and so one of the things that's going on right now is what's going on with the interest rates, what's happening in the market. So, Josie, I wanted to ask you. We have seen and I'm looking at this number and it looks a little high, but my brother sent it to me. But they're seeing like over a 60% increase with interest rates since January of this year till now. Can you kind of break that down for us? What you feel is going on, or break it down in a way that people understand. That we're not about to go into a collapse in the economy.
Right. Let me give you just some bullet points on what we're seeing. So inflation increased through 2021, and the Feds explained it would be a temporary due to the COVID-19 pandemic and federal spending to help get people through the pandemic with economic help. 2023, this year, temporary inflation became permanent. Several factors. Supply chain disruption. The Fed slowed down on buying bank securities, which factor on 2020 and 2021. 2022, the Fed stopped buying and selling bank securities and backed away. These are the loans that mortgage loan originators create. Same time, inflation situation continued to increase and got out of hand. Problem created. This led to all mortgage lenders to charge more to any borrowers who have higher level pricing adjusters, higher LTVs, investments, and second home loans, leading borrowers to pay a greater amount of money, fees, and not able to do loans on a recurring basis. Different things happening simultaneously. So pretty much these were some of the many influences that control the interest rate hike in 2022.
Okay. I know in the insurance business, what we noticed, and that was a great explanation, by the way. Thank you. One of the things we noticed is that insurance policies should be designed to cover the value of your home in case of a total loss. So, Dios no lo quiera, there's a fire and you lose your entire home. The insurance policy is supposed to be there to rebuild that house. Okay. And so that is a main driver to when we get to the actual, which was everybody wants to know the price of the policy. What we noticed is, for instance, my house, we have just a regular home here in Arlington. It went from about 150,000 when we purchased it to the beginning of this year, certainly last year. We could have sold it for like 350,000. So if I had bought that house in that period, and then I was going to look for insurance, it literally would have potentially been 3 times as expensive to buy that house. I mean, to insure that house because of that. So is that what is happening with that trend of what I call the inflated cost of just the homes themselves? And maybe Miguel can chime in on that.
Actually, that's a great question. And I think, honestly, that's a question that Jorge can probably answer better because he's a real estate agent. When you talk about the inflated cost, of course, of the properties, I think we all live, this year and last year where properties wouldn't actually been overbought by a lot of consumers, because they were competing with 20, with 30 offers, and people were getting very desperate because they needed a place to live. So they were willing to go above the asking price by several thousands of dollars just to be able to get into the house.
Yep, and actually that's something that we're going to talk about here a little later when it comes to what something like that does to you financially versus buying something at market rate. But it impacted everyone differently. I think just depending on your singular situation, whether you needed to buy a home or where you were buying an investment property. I'm going to go right into this question here. So the question reads, I bought my first home this year at $60K less than what it's worth. So I'm assuming what it's worth today. So he already has equity. Should I sell it and go rent somewhere else? So that's that. I mean, it all depends, right? You do have equity and you can use that equity to your advantage. If you wanna sell it, but I think it also give you an opportunity to build even more equity if you rent that home and then go buy another one, right, Miguel? I mean, that's typically what you want to do.
That's correct. And to answer the question for this actually person that is watching us right now, if you're gonna sell a property and you're gonna be able to make equity out of it, first of all, why you want to go rent? Why now you want to go ahead and become a renter and start losing out of that equity that you could potentially make out of the sale of the house? Like Jorge mentioned, maybe a better thing for you will be, okay, you sell that house, and right now that it's a buyer's market, take advantage to use that money to put as down payment on your next property, or even better, not sell it. Let's see if you actually can qualify to turn that property into an investment property and buy yourself maybe a little bit bigger home that you and your family can occupy.
Right. Or even a similar home, right? Like if you're a single person and just, I know a lot of individuals who have multiple properties, 3, 4, 5, 6 properties, or they have like a quadruplex. They live in one of the units and then they rent out the other 3, and that pays their whole mortgage. Miguel, so one thing that I hear almost weekly, from current clients, past clients, is this 2008, 2009 all over again? Is the market gonna crash? Is it about to crash? Yes or no? What are the biggest differences between now to 2022, 2023, and 08 and 09?
That's a great question, Jorge. And I'm actually going to give you my personal opinion. As a matter of fact, I was in the industry back in 2008, 2009 when the market crashed. I came in around 2005. And I can tell you, people think, and it may almost feel like it's the same thing that we're just going through again, but it's not. Because back in 2008 and 2009, the market was actually flooded with a lot of bad debt, a lot of subprime loans, a lot of teaser rates. A bunch of people actually got into what we know as the ARM rates. And I'll be honest with you, I remember customers asking me, "Hey, Miguel, so what do you think about an ARM rate?" I said, "Well, it's very simple. We're first going to take an arm, then we're going to take a leg. How's that for
That's a great way. That is a good way.
Yeah. Exactly. And if you look at back then, that's all we were doing. We were actually just basically checking people's pulse and giving out mortgages. Right now, over the past couple of years, that didn't happen. People, if you recall, actually even up to this day, they're going through a lot more regulations or restrictions to be able to actually become a homeowner. Yes, we're starting to see a little bit of the actual what we call non-QM, which is non-qualifying mortgage loans, coming back, but not in the percentage or not in the sense that we actually lent back in 2008. Now, this is probably something also that you have probably better knowledge that I do as a real estate agent. People saying the market is going to crash, properties are going to drop in values 20, 30,000. I honestly think, Jorge, that's not going to happen. I think what's going to happen, you've probably seen a couple of my TikToks that I've done or my videos as well, where I talk about over the past 2 years, just talking in El Paso, our properties were actually gaining value of about 18% per year, something that we had never seen in this market, right? I think what's going to happen right now, we're going to go back to 3-4 years ago when a property were only, gaining a value of maybe 2 to 3%. But the property is actually dropping in value. I seriously doubt it.
Yeah, when I first started, I wasn't in the industry in 08 and 09, but when I started, it was a full on board buyer's market. And what I could tell you is that properties maintain value, is I guess the best way to say it, right? Yeah. The competition as far as price increases and how much buyers were willing to pay over the asking price was not what was last year or anything like that. So I agree with you, Miguel. I also don't think we're going to start seeing drops or massive drops of any kind. I just think it's going to balance out.
Yeah. Well, and if I can, I just want to give it a little quick color. What happened back in 2008 in a lot of ways was intentional. Correct. We talk about the mortgage being the bench or the a lot of how the American economy works, but Wall Street developed a lot of, and I'm not going to get into the weeds of it, but a lot of products that were actually intentionally made to make a few people very wealthy, but they were betting against the mortgages. And exactly. and the reason I say that is because we benefited from an ARM loan, but we understood what it was. So again, long history, but we had to buy a second house when our daughters were about to go to school, and we were given one of these loans, which we shouldn't have qualified for it in any normal market. The numbers, the debt to rate issue and all that, we should have never qualified for it, but they gave it to us. But, oh my gosh, I set the timer to that 2-year mark, and about 3 months before it was coming, we refinanced, and this is the home we live in now. But I saw a lot of people who didn't understand that. Um, Josie talked about the American dream, and they were giving out 120% loans. You get the house. Not only that, you get money to buy. I mean, you get the whole thing, and you don't care what's going to happen in 2 years. So that's hopefully, and I hear that from you guys. Hopefully, we learn from that.
Yeah, and it's funny. I was gonna say what someone just put in there. That's actually there's a great movie, The Big Short, actually. That if you look at it, you're gonna be able to now identify the differences between what happened back in '08 and what's happening right now. Josie was earlier talking about the mortgage-backed securities. What caused the mortgage crisis in '09 was actually the fact that the lenders were stacking up the notes, okay, that were gonna be sold to the government, basically, making it seem like all this is prime paper or A plus, what we call. But in between were all those C minus, or C notes in there being sold as if it was prime paper. So, after those mortgage-backed securities were bought on the secondary market by investors, a few months down the road, now they were not performing, and the companies were just starting to go downhill.
Yep. Josie, I know that you had recently a quarterly meeting. So we wanted to get, you said you had some good insight, which, will help us understand that hopefully this doesn't happen again. Do you have some things that you can share with us?
Yes, absolutely. So although things are winding down in the market, just yesterday the Feds met, and there was a very small minor impact action expected, less than an eighth 0.125% interest rate impact increase to interest rates. So we didn't see the big increase that everybody was expecting. So that's a good thing in the market. In general sense, the earliest we anticipate interest rates to drop, say going back to where we were when the rates dropped, we're probably looking at maybe Q1, Q2 next year. The market will eventually correct itself within the next few months. We're closer to the correction today than we were months ago. The short-term hiccups on the market will correct itself. Buy now, pay short-term increase, and refinance in a few months. We at Waterstone Mortgage, promote and share this quote: "Marry the house, date the interest rate."
Yep.
Mind equity gain. That's what pretty much I'm sharing with my clients, my borrowers, and with everybody. So don't get discouraged. Buy the house now. Equity. Big thing to be in the lookout for.
I think the only road bump, if I may, is that now maybe the price is where things might have to change, but you're still buying to your budget, right? So the focus should still remain, okay, what's your budget? What price point can you be at? And let's move forward with with buying the home, just like Josie said. Now, Josie, just to ask you on, you mentioned about next year, early next year, going back to more of a normal rate, lower rate. What in your mind is a normal rate, right? So last or maybe more than a year ago now, we saw rates in like the 2-3%, right? 2.5%, 3%. What is a normal interest rate in the market?
I'm going to say 6%, 6.5% is going to be your average mortgage rate. Just remember, when bad things happen in the world, that's when it's good for mortgage lending because interest rates drop. But of course, we don't want to continue seeing that, another pandemic come in or anything like that. But overall, the average interest rate is about 6%.
Okay, that's good. Josie, I wanted to ask real quick. You mentioned something that we hear a lot. It's like, I call it kind of a buzzword. You said the market will correct itself. For a lot of us who hear that but may not understand what that means, can you kind of break it down a little bit in simpler terms? I've always believed real estate is maybe the safest investment out there. And for those people that are kind of wondering, can you kind of tell us a little bit about what that actually means?
Yes, absolutely. So what that means is that eventually, within the near future, a couple of months, rates are going to drop. They're going to stay steady. We might go into a period where we're going to see interest rates coming up a little bit, coming down a little bit, staying steady for a couple of weeks. But eventually we should come back to market rate, 6% at the most. Now, remember, the government is trying to also control inflation. Inflation has dramatically increased.
Right.
So they can't just up the interest rates or drop the interest rates, balance inflation. Inflation is 2% above where it needs to be. So once it drops 2%, then that's when we're going to start seeing interest rates start dropping.
Okay.
So, Miguel, I'm going to read off some numbers here for you, Miguel. I took these from the National Association of Realtors database. So I did some digging, and so the numbers are from the last quarter of 2020 until second quarter of 2022. So 64% of active buyers during that time were offering an average of 32,000 above asking price. And remember, these are national numbers, okay? But you know, based on my experience here in El Paso, I mean, it was pretty common to see this.
Right. Yes, exactly.
Out of those 32,000, out of the 64%, 89% were fully waiving the appraised value, and that's what we were talking about earlier.
That's
So for our viewers, so for our viewers, that means that if you offered, just going based off of these numbers, if you offered $32,000 above the asking price or listing price, it didn't matter if the house was worth that or not. And I'm just talking layman terms, so everybody understands what I'm talking about here. Okay. So in other words, if the house did not appraise, because remember, a condition of lending is the house has to appraise, right?
Correct.
Yep.
Or, well, a condition of the loan of what's going to be the loan amount is the appraisal, right? So anything above that, you do have to come up with the difference. Surprisingly, many of these buyers did come up with that difference.
Hey, I'm sorry. Can I interject for 1 second on that?
Yep.
Because this is a point that I don't want to say a point of contention, but it is a point that's not understood. So just for a quick example, let's say a house is on the market for 350. Somebody comes in and says, throws 380 at it, just to get it. Like you said, they forego the appraisal or they forego even the inspection. We heard some crazy things. Here's the thing. When they come to us for the insurance, it's not going to be the value of the policy is not going to be anywhere near what the loan needs to be. I have some underwriting liberties, but not anywhere near what we have been seeing. I mean, I'm talking about sometimes it's a home that the insurance value is $500,000, but the sale price is closer to $700,000. We can't do anything to get anywhere near that. That's just an interesting thing that we battle with on that situation. That I'm kind of glad it's kind of going away.
Right. Yeah,
and it's funny. Which, by the way, Javier, I mean, you can interact whenever you want. This is your show. I'm sorry that your brother and I kind of took it by assault, but please feel free to interact whenever you want to. So it's funny you're talking about those things, Javier, because as us as lenders, of course, what we care is the property is covered 100% value of what we're lending. But like you mentioned, these individuals were buying the houses for way above what the actual property is worth. Which for you guys as insurance agents represents a completely different ball game. So let me ask you a question. Now, this is for our audience and even myself, to educate ourselves.
Right.
In the worst case scenario, in the event the house is a complete loss, what happens there? If you bought a house of $40,000 over what the actual appraised value was?
That's a great question.
Well, here's the way insurance should work. And every company is different. The underwriting liberties are different with every carrier, but the way insurance should work and our logo or our motto, so to speak, is we want to make you whole. Okay, so just because you bought a home, and that's a good example that I was giving you. The insurance value is done by by a tool we have that includes the per square foot of reconstructing wherever that house is and some other factors. But just because they're going to pay 700,000 because they really want that house doesn't mean that we can get anywhere near what we call the risk of insuring that house for 700,000. Just because you're going to pay for that doesn't mean the company's going to accept that risk. So in the case of the company that I represent, if I am asked, well, you got to raise that, to 700,000, my answer is going to be, I can't. So that is that's the limit of what I can do. Now, if the lender or one of you guys accepts that policy, which I know you won't because it really far off the loan amount, and there's a total loss, then what you have in an insurance policy is 500,000, not 700,000. So guess what? If that person owes that, guess who owes the balance of that? The customer does. Or there's some customers that'll say, well, if this house burns down, I don't want, I've had people say that. I don't want to rebuild a house this big or whatever. And so I'm like, well, then why are you buying this house right now? Kind of thing. But and it's the same with any insurance policy, whatever your limits are, that's what the max that the company will pay. So in theory, that's the way it would work. But most insurance companies will stop it way before that. They'll say, okay, we're not going to raise it. If we can't negotiate this, then we can't write the policy. They won't issue it.
Okay, interesting.
And you know what? Those issues start even way before they're owners of the property, because I experienced some situations where the buyer had to take care of the lender required repairs. So appraiser went out there, he appraised the home, and he required repairs. And typically, I mean, that's a negotiable situation, but typically a seller out of good faith will take care of it. But we did see a lot of buyers having to do it. And then, buying the home as is, another thing. But so listings were having an average of 22 offers within days of being listed, right? Which is why we would see 20, 30, 32,000 above asking price. But Miguel, and you already kind of touched on this at the beginning of the podcast, but why? I mean, it's great for the seller, right? The people selling the home, but from an equity perspective, right? You just paid 32 above asking. Why is this a problem?
Well, I guess at the end of the day, Jorge, it's all a matter of perspective. I don't necessarily consider it. I mean, for those individuals that really wanted to get a house and they end up paying $30,000, $40,000 above the asking price, it's not necessarily that it's gonna be a problem. It's just gonna take you much longer to build equity into the property. But at the end, you already have a property. You're already a homeowner. You're already enjoying the fruits of your labor and investing into your future versus just continue to throw money out the window by paying rent. Josie earlier was talking about something that all lenders are using nowadays. Marry the house, date the rate. Well, if you're married, you can't date, just so that your wife finds out, you're going to be in trouble, right? But one of the things that I tell my clients, say, you know what? Stop looking at the rates. If you want to talk about the rates, and let's talk about rates. Historically speaking, in the last 15 to 20 years, our average rate in the United States was 7.5%. So right now, being in the 7.5%, almost 8%, we're just in the average. What happened is that we got so used to seeing those 3% rates that now that we see the average, we think it's a high rate. I tell the client, look at your mortgage payment. As long as it's a mortgage payment you feel comfortable with, a mortgage payment you can afford, and the house that you like, go for it. Start building equity for your future. So again, I think it's a matter of perspective. I don't see it as a problem. You bought the house, great. You were able to get a house, for $30,000, $40,000 more at a 3-4% rate. Honestly, it's almost the same as now getting a house at market value at a 7% interest rate.
Yeah. And I guess I see the problem of appreciation on the house, right? You buy a house, and it's, as Miguel explained to us earlier, it's good. Now it's going to take a little longer to appreciate over time because of the way the market is, right? But if you a year ago just bought a home that's already, you're already 32,000 underwater, how much longer is that going to take, right?
Yeah.
So that was the point I was trying to bring home.
Yeah, and one more little quick comment on the insurance part. it doesn't happen. It's not very common, but the insurance policy doesn't insure the dirt, and that's literally the way we say it. But here, there's some neighborhoods here where I live, especially in Dallas and some parts of Fort Worth, where the lot, and it's not because it's a great big lot, it's not 100 acres. It's just where it is. It's almost worth or more than the house. So if someone's going to buy $1 million home in Dallas, 500,000 of it might be the lot. Well, we don't insure the lot, and that also creates a problem there, as you can imagine.
Interesting. Very interesting. That's great to know.
Absolutely, 100%. What is your thought, Josie, on the appreciation of homes over time as it related to when the market was just crazy, or it was a seller's market? Is what I'm saying.
Well, eventually everything's going to level out, and I see that equity will continue. We'll continue to obtain equity on mortgages. Maybe we're going to see a small drop, but right now is the time to purchase because of equity increasing every year. And like Miguel said, purchase now what you feel comfortable with. In the near future, 3-4 years from now, you're going to be surprised how much equity your house has. Then you could always refinance, maybe even try to cash out, remove that PMI insurance to lower your interest rate. So it's time right now. It's a good time to invest into purchasing a home.
Yeah. Josie, real quick, I just had a quick question. If you had to kind of give it a rough number, and I'm asking this because I still grew up, I'm almost 50. I still grew up in a world where you bought, the American dream, a piece of America, and the goal was to pay it off, right? That you saw that day where you made that last payment, or maybe you got, you were able to pay it off early, whatever. But my question is, in your experience, how many people, so if you had 100 clients, how many of those clients refinance or, start over or things like that?
Believe it or not, clients will come back to you. They will remember you. And as soon as they start seeing interest rates start decreasing, they'll reach out. They come back. And a lot of times they want to shorten the term. So they look into refinancing maybe a 10, 15, 20 year. And of course, they'll be paying maybe the same what they're paying now or maybe under. But in the long term, that home is going to be their home free and clear.
Yeah,
right.
So we do see a high percentage of people refinancing and especially cashing out when, the kids are grown. They need to go to college. Kids are getting married. There's money needed in the family. They'll look into cashing out.
Right.
Cash out.
Yeah. That's a good way to see it because, like I said, we always look at just paying it off and you have the title and that's make you feel better. But life happens. There's so many things that happen and there's not a safer way to, sort of lend yourself money than with this piece of real estate you have. But in the interest of time, we try to keep it to, we could talk, I know we can talk forever. We learn a lot of things, and this is a complicated subject, but hopefully the people listening and watching understand. The biggest thing is we want to bring confidence back. If it was being lost, I don't think it is, but to the real estate market, to the mortgage business. Hopefully this has cleared out doubts, anxiety, everything like that. So I wanted both of you to, we like to crystallize at the end. We like to kind of bring up 1 or 2 points to give people that are listening. Okay, this is what I want you to walk away with from this show. So let's start with you, Josie. What can you tell our audience as far as the confidence of real estate and the mortgage business?
I would say take advantage of value increasing so rapidly. Buy a house now. You for sure are going to have equity within the next couple of years. That equity is going to help, like I mentioned earlier, family members, any situation that you come across that you're going to need money, that the equity is there on the home. So go ahead. Don't be afraid. Rates are going to eventually come down. And once they do, then look into refinancing.
Yeah. So from what I hear from that, no worries about the current interest rates or what it's doing. You have said it more than once. The market will correct itself.
Right.
Okay.
Correct.
What about you, Miguel? What are your final thoughts about this and the interest rates?
Well, here's what people need to keep in mind, understand. Everything is cyclical. If we look at historical data when it comes to real estate and mortgages, you're going to see that it just keeps on going up and down, up and down. So yes, there's going to be a time in the future when you can refinance a house. So the decision at the end of the day is going to be yours as a consumer. Either you want to build equity for the future for yourself, or you want to build it for your landlord. If you do it for your landlord, he's really going to be very thankful, for you doing that for him. Because at the end of the day, it's like I tell my clients, I said, you're always going to need a place to live. Unless you're going to live with mom for the rest of your life and dad,
Right.
you need a place to live. So either you're paying your own mortgage or you're paying your landlord's mortgage, but you
Somebody
still pay
else's
the mortgage
mortgage.
at the end.
Yeah.
Right.
So to both of you, it's definitely a good time to buy a home right now.
It's always going to be, my friend.
Always.
I'm going to give my probably my age away, but I bought my first house. Let me see, man, about 28 years ago, approximately.
Yeah. Yeah.
And when I bought my very first house, actually, the prime interest rate was a 7.875, and I didn't complain about it. I was very happy that I was able to actually purchase that home. And let me tell you, up to this day, I still own that property. I turned that property into an investment property.
Good.
And speaking of investments, Miguel, so we have a question right there on your screen. My home is a condo. As an investor, should I strive for a single dwelling unit to live in, or does that not matter?
That's actually a phenomenal question. So it depends on the area where of course, our viewers actually watching this, because there's areas to where condos it's a hot commodity. You can get a condo with any type of a mortgage loan, FHA or conventional. The idea is that if you're looking to turn your current property to an investment property, the best way for you to do it is that you buy a property a little bit bigger that you're going to occupy as your primary, so that you eliminate the need of having to put 20% down, which is a typical requirement when you're buying an investment property.
And I think if I know who is asking this is up in the East Coast, like the New York, New Jersey area.
Yes, that's correct.
Yeah, so maybe look for a little bit bigger condominium that you can move into and make it your primary and turn your current condo into an investment property. Because here's the thing, of course, for our friends to understand, is that if you, for example, you already have a beautiful, nice, big house, I don't know, 2,500 square foot home, and you're looking to buy a smaller property that is maybe 1,500, well, that's clear indication that's going to be an investment property because you're not going to occupy it as your primary. If that's the case, you're going to need 20% down. But to the contrary, if you, for example, have a smaller place that is maybe 1,500, now you're moving into a 2,000 square foot home, you're upscaling that, and you move to that property as your primary, then you can turn this into your investment. And if you qualify, you're only going to require a minimum down payment of 5%.
Yeah,
absolutely. If there's anything that I can tell based off of my experiences when we were going through the seller's market, it was just very, especially for my clients, my buyer clients, it was just very hard to find, especially the ones like you mentioned, Miguel, the ones that really needed a home, and the inventory was just non-existent. I mean, we would get on the phone and talk about this daily, right? We got our clients pre-approved, and there's nothing to sell them out there. There's no homes. And I think the way the market balances out now, where we're starting to see more inventory and less competition. Honestly, I prefer that market for buyers because it really I think everybody deserves to be a homeowner, and it's good to go.
And one thing, for example, you didn't touch up, but you were talking about Jorge, when you were talking about people buying houses, that the statistics show they're buying houses for over $35,000 of the asking price. Well, guess what? Their cash to close was a lot more than 35 because the sellers were not paying any closing cost at all, not even title policy or survey. You're talking about $6,000-$7,000 at least more above the asking price for the home plus their down payment.
Oh, easy. Yeah, we would have to have buyers come in at $40K. Yeah, for sure.
Basically, you were changing the money from one pocket to the other because you're saying, oh yes, I got a 3%, I got a 4% interest rate. Well, yes, but your cash out of pocket was 40 or 50,000. Right now, you can get into a house with the minimum down payment. You can negotiate incentives. You can negotiate the seller to pay for closing costs. Give you money to buy down the rate and buy the house at what the market is dictating.
Right. Absolutely. So guys, thank you so much for your time tonight. I know, like my brother said, we could probably stay on here and talk forever about this topic. But we really brought some very important information home, hopefully for all our viewers. If anybody has any questions or anything else that you'd like to talk about, you guys, everybody knows where to find us. This goes up in Facebook. Comments, send us a comment. Josie and Miguel are absolutely the best at helping out people, explaining not only the products but offering what makes sense to the clients. And then we work hand in hand, and the realtors come in, and that's where we help support in finding a house. But guys, thank you so much for being with us tonight. Thank you for your time. I know my brother and I know time is precious, and again, we could talk about this forever, but it was really good talking to you guys.
No, thank you guys for having us. Really appreciate it. And one last thing. So you see my username right there at Mortgage Miguel on TikTok and my social media, guys. Para mi gente, para mi familia, mi primer idioma es el español. De hecho, si se meten a mis redes sociales, van a encontrar todo mi contenido en español, totalmente. ¿Por qué? Porque hay desafortunadamente un hoyo como de este tamaño de información en español cuando se refiere a hipotecas y a bienes raíces. Entonces, ahí conmigo la pueden encontrar.
Josie, ¿cómo te encontramos?
Thank you very much for the opportunity. It was great. It was great to meet you, Miguel, and Javier. And yes, I'm a Waterstone Mortgage loan originator. I do have a website that hoping that Jorge can share with you all. If you have any questions, reach out to me. If you want to apply online, whatever's easier for you, face-to-face, over the phone, just reach out to me and we'll schedule an appointment. Thank you.
Yep. Yeah, we'll add your socials or your website on the comments, and then people can reach out later. And the great thing is that maybe not so much for realtors, but for the rest of us, we work in the whole state of Texas. A lot of our work is done on the phone, at least for me, and I think for you guys as well. My brother has to still go in person. It's hard for him to travel the entire state, but
I just referred it out. I am licensed in all of Texas, but Texas is the biggest state in the country.
But it would be hard for him to show a house in Socorro and then come to Arlington and show one the next day. So I can't say that for him, but yeah, just keep us little insurance guys in mind when we're trying to figure out the value and the risk of a house, because we have limits that they impose on us, and we try to do our best, but when it gets to a certain limit, that's it. We can't go beyond that. So thank you all for taking the time to be with us. I think people took some good value from this. And yes, buy the house, get the loan, refinance, do it all. It's never in the history of the American economy, it's never failed us.
Absolutely.
It's a buyer's market. Don't make it a landlord's market, because you're gonna pay someone else's mortgage, like I said,
and even higher rates. So.
Right.
And thank you to our audience, especially the folks who commented. I think and his name is Mark, who's in the East Coast, who's the person who's commenting the most. So that's how far the reach is of the people who spend time with us. And he put some other comments on there that we didn't post, but he's a great friend, and he's the one that was asking about. I think he purchased a property recently this year, so. He was excited about that. But thank you all who have listened and spent time with us. So for my brother Jorge, this is Problems,
and for my brother Javier, and Opportunities. Have a good night, everybody. Thank you.
Good night.
Good night, guys. Bye, Josie.
Bye-bye.